Hey guys, hey fellow investors, this is PC here from GlobalAlphaS. Just a quick Wednesday update. It's the 28th of July today, and we've done some little refurbishments in the portfolio yesterday, taking it some tactic exposure to the Chinese market, given the sell-off that we've been facing over the last couple of weeks over there due to the crackdown that the Chinese regulator has basically done to the equity markets in China. So let me just quickly run you through what has changed in our portfolio. I will just present my screen right now very quickly for you. All right, I hope you see me. So this is our portfolio as of now, as of the 28th of July, really. So we still got our major anchor holdings, which is the Tilt, long-term treasuries, and the gold under the GLD ticker, right? So that's the Spider ETF for gold. We also have some exposure in the short-term treasuries, as we usually do, represented by the iShares SHY index, 1 to 3 years maturity of the US treasuries. What we have done yesterday in the portfolio was pretty much some tactical changes. Ahead of the numbers for Microsoft and Apple, we have basically taken some profits, as both of the names have been quite nicely up recently. We were expecting a tremendous quarter in a year-on-year perspective, and especially Apple did provide a really, really good quarter. Still, one is up, the other is down right now in the pre-market. So we will be looking for some better levels in the upcoming future to tactically come back to our major holdings in both of the names. We've also cashed in some of the Garmin exposure for similar reasons, really. So what we did basically is we cashed in some of the US exposure before we had over 75% exposure in the US, and we exchanged it for some increased Chinese exposure. I have written a post on this yesterday. You can see it on my feed. Basically, there's been a panic sell-off lately in China, and some of the names for a reason, and some of the names for no reason really are trading at a bargain right now. I have added to my holdings in Alibaba, which is now currently a relatively big portion of the portfolio, roughly 8%. And I have added Baidu as a tactical play for a rebound. Just very quickly on the technicals, because I have run through the fundamentals already in the post yesterday. As you see here, in case of Baidu, it's extremely sold off. It has basically come down to the level where it was after the big spike at the start of 2021 started. So we are basically where we were in November 2020. So this is kind of a big support level here from a technical perspective. As you can possibly see, the major oscillators are also extremely sold off. For instance, the RSI is sold off as it was 1, 2, 3 times, 3, 4, 5, 6, 7 times only during the last, let's say, 2.5 years. So pretty oversold. It's also out of the Bollinger Band here, as you see. So the dynamic of the fall was very, very big. This was mostly driven by the fact that there's a lot of retail investors in the US, in the Chinese stocks, obviously, and this basically don't help the volatility of those stocks, right? So there's no such big marginal institutional buyer in the name. Obviously, the US institutions are getting into those names right now as they are US listed, but this is going to be a longer process. So out of this whole story with the watchdog and Chinese corporations, I think how it's going to end, it basically is for them to be dual listed. I do not imagine them delisting from the New York Stock Exchange or the NASDAQ, but I would basically opt for a dual listing, and I've already seen a couple of comments going into this direction as well. Shortly on Alibaba, as you see here, it's even more oversold, totally out of Bollinger Band, so like very, very short term tactically, it's a level from where historically there's been some relatively good upside over the period of next month or two, usually an upside of 10 to 20%. But as I said, both of those names are trading extremely cheap right now. Take a look at my post from yesterday if you want to look into the details. So yeah, we took a little bit of a bet into the Chinese market. We also added the CQQQ, so the Chinese biggest Chinese corporations that are already trading within this ETF. So currently, as you can see here, our exposure is mainly North America, obviously 66% right now, but we've added quite a bit of exposure to emerging Asia, which is roughly 26% right now. We've also got some exposure in Europe right now, but I'm not seeing many opportunities at the moment in this area. So we have taken a tactical approach to the Chinese market, basically counting on a rebound. And this has already worked quite well yesterday, as most of the stocks were basically closed much higher versus where we bought them intraday. And as you see here, we've got a little bit of volatility in the market. I see people exposed mostly to equity struggling lately, but as you see, our portfolio is up still almost 1%, 70 basis points so far this year, this month in July. So our diversification strategy works, and I'm not planning to change it. So as of now, let me just show you quickly. We still have 65 almost percent allocation in pure stocks, but we also have 35% in ETFs, and out of those ETFs, some of them are obviously equity based mostly. So we've got the TQQQ, that's also the tactical play I have already talked about earlier in the week for long equities, short volatility trade, and I'm planning to basically be tactically playing around on this leveraged ETF ahead and after the Fed meeting that we're going to have this afternoon. We've got the CQQQ and we've got the TQQQ. So all in all, this is roughly 9 plus 4%, so 13%. So our equity allocation is somewhere between 75 to 76% right now, which is in line with our general strategy for this period of the cycle. So yeah, that's it on the portfolio, guys. Thanks for listening. Please do watch the Fed tonight. We've got the FOMC meeting and the interest rate decision, but obviously the message from Mr. Powell is going to be the utmost important thing. So yeah, be watching that and take a look at my recent posts regarding what I think when the next correction is going to come and why it is the Fed that will most possibly be the reason for that. Thanks for today. Thanks for watching, and stay tuned for next updates. Thank you.